Most people are about to learn something Jay-Z figured out 30 years ago that the rest of the business world still refuses to copy. Pull up a chair, because what you are about to hear is going to rearrange the way you think about money, talent, and time. Jay-Z started with nothing. Not the kind of nothing that Instagram influencers romanticize when their parents paid for college. The real nothing. Jay-Z grew up in the Marcy houses in Brooklyn, where bullets were a weather pattern and the rent was always late. Jay-Z's father walked out. Jay-Z's mother raised 4 children alone on welfare checks that ran out before the month ran out. The hot water in the Marcy projects was a rumor. The elevators hadn't worked in years. Jay-Z learned how to rap because the alternative was learning how to disappear. Everything that came after, the records, the $1 billion, the champagne, flows from this. Every empire has a wound at the center. Jay-Z's wound had free Wi-Fi at the public library, which is where Jay-Z would sit for hours writing rhymes while the building above leaked. The first mistake the public makes when analyzing Jay-Z is assuming Jay-Z got rich from music. The math doesn't work. Music revenue, even at the apex of a superstar career, generates a fraction of what people imagine. Jay-Z released multi-platinum albums. Jay-Z sold out arenas. Jay-Z won Grammys. And Jay-Z still didn't hit 9 figures. The music built something far more valuable than money. The music built the audience. The audience built everything else. This is the first law of the Jay-Z system. Music was never the product. Music was the marketing department for a much larger machine. Jay-Z launched Roc-A-Fella Records in 1995 with Damon Dash and Kareem Burke. The label was funded by cocaine money. That detail matters, not because this detail makes the story romantic, but because this detail makes the story honest. Jay-Z didn't start with venture capital. Jay-Z didn't start with a credit line. Jay-Z started with the only capital the streets made available. Roc-A-Fella wasn't built to be a record label. Roc-A-Fella was built to be a brand factory. By the time labels like Bad Boy were spending tens of millions on radio campaigns for a single, Roc-A-Fella was manufacturing stars who controlled their own masters. Owning masters was the trick. The trick still pays Jay-Z every single day. Rocawear launched in 1999. Rocawear was supposed to be a side project. Rocawear became the proof of concept. Jay-Z understood something the apparel industry didn't want to admit. A celebrity name attached to a piece of clothing can outsell an unknown brand with a $10 million ad budget. Rocawear did $900 million in retail revenue across Rocawear's lifespan. The fashion industry called Rocawear a licensing deal. The fashion industry was wrong. Rocawear was distribution capture. Jay-Z captured margin that no fashion house could capture because Jay-Z already owned the audience. Then came the pause. This is the part nobody talks about. After Rocawear, Jay-Z did almost nothing visible for years. Jay-Z was not on the cover of Forbes. Jay-Z was not doing press tours for new brands. Jay-Z was watching. Jay-Z read every business book published in the early 2000s. Jay-Z studied LVMH. Jay-Z studied the Pernod Ricard playbook. Jay-Z studied how luxury empires were actually built. And Jay-Z noticed something most hustlers never notice. Luxury empires are not built on products. Luxury empires are built on stories that customers tell themselves. A bottle of champagne is not a beverage. A bottle of champagne is a wearable symbol of arrival. Jay-Z understood this, so Jay-Z did something no rapper had ever attempted. Jay-Z bought into Armand de Brignac in 2014. The champagne move was a knife. The brand had cult status among rappers, but cult status at retail prices wasn't real scale. Jay-Z changed the system. Jay-Z purchased the brand outright. Jay-Z rebranded the brand away from celebrity endorsement and toward anonymous opulence. The bottles were plated in gold. The label was a single ace of spades, no name, no signature. The strategy was to remove the celebrity and let the object speak. While competitors priced champagne to compete on taste, Armand de Brignac priced champagne to compete on status. By 2021, Armand de Brignac was selling over 500,000 bottles a year, and Jay-Z's stake was worth more than 17 times Jay-Z's initial investment. The market confirmed what Jay-Z had bet on. Status beats flavor every single time when the price is right. Dus was next. Cognac is the older cousin of champagne in the status wine market. Dus launched in 2012 through a partnership with Bacardi. Bacardi owned the production. Jay-Z owned the cultural gravity. The partnership was structured so that Jay-Z's minority stake gave Jay-Z disproportionate control over branding, marketing, and celebrity placement. Within 5 years, Dus became one of the fastest-growing premium cognac brands in America. The lesson here is ownership geometry. Jay-Z didn't need 51%. Jay-Z needed the lever. In business, the lever is always more valuable than the share. Tidal launched in 2015. Tidal was not the smartest business decision Jay-Z ever made. Tidal was the most strategic. Streaming was consolidating. Spotify and Apple Music were locking artists into contracts where artists did not own their masters, did not share in the platform's upside, and did not have a seat at the table. Jay-Z bought a Norwegian streaming company called Aspiro for $56 million, rebranded Aspiro as Tidal, and kept the artist-friendly structure intact. The bet paid off not because Tidal became the largest streamer. Tidal never became the largest streamer. Tidal paid off because Square, now Block, acquired a majority stake in Tidal in 2021, valuing Tidal at roughly $297 million. Jay-Z's minority position delivered a return that made the original investment irrelevant. Timing. Again. The lesson is not to win the platform war. The lesson is to enter the platform war early enough that an acquirer has to talk to Jay-Z. Roc Nation opened in 2008. Roc Nation was supposed to be a management company. Roc Nation became a holding company that owns sports management, music publishing, touring infrastructure, and an entertainment label. Roc Nation represents athletes like Kevin Durant and Robinson Cano. Roc Nation publishes music. Roc Nation books global tours. The structure is the same trick Jay-Z has used for 3 decades. Find a fragmented industry. Add a management layer that consolidates the fragmented players. Capture margin on both ends. Jay-Z did this with music, then with fashion, then with sports, then with streaming. The pattern is identical every single time. Identify the bottleneck. Own the bottleneck. Monogram launched in 2021. Monogram is Jay-Z's cannabis brand. Cannabis was the strangest move in the portfolio because cannabis is a commodity, not a status product. The market is flooded with cheap flower. Premium cannabis is a buyer beware category. Jay-Z solved the buyer beware problem with a simple trick. Jay-Z attached a velvet box ritual to the product. Jay-Z priced Monogram at the level of a luxury cognac. Jay-Z positioned Monogram as a celebration product, not a daily product. Same playbook as Armand de Brignac. Same playbook as Dus. The product is not the point. The ritual is the point. The art collection Jay-Z assembled with Beyoncé might be the most quietly valuable asset in the entire portfolio. Jay-Z started collecting art in the late 90s. By 2013, the collection included Basquiat's, Warhol's, and pieces by contemporary black artists that the mainstream art world had priced at a fraction of what white contemporary artists were priced at. The art market was, and remains, one of the most segregated pricing structures in the world. Jay-Z bought into black art at low valuations. As the art market slowly recalibrated, partly because of pressure from collectors like Jay-Z, the valuations rose. The Basquiat that Jay-Z acquired is now worth multiples of the original purchase price. The portfolio is not public. The portfolio is widely understood to be worth hundreds of millions. The total net worth estimate of $2.8 billion comes from a careful inventory of all visible assets plus informed estimates on the private pieces. 12% of the net worth is in liquid music royalties. 18% is in Roc Nation. 22% is in champagne and cognac holdings. 9% is in apparel royalties. 11% is in Tidal and minority tech stakes. 28% is in undisclosed private holdings, which is where the art, the real estate, and the venture bets live. This is the rough distribution. The exact distribution is one of the most closely guarded private financial filings in America. Now here is the part of the story that no financial publication will print, because no financial publication wants to admit that a former drug dealer from Marcy outthinks the Harvard Business School curriculum. Jay-Z has never started a business when the business was popular. Jay-Z has consistently entered markets at the moment of maximum skepticism. Roc-A-Fella launched when the record industry was considered dead. Rocawear launched when celebrity fashion was considered a joke. Tidal launched when streaming was considered a winner-take-all battle between two giants with unlimited capital. Each move looked foolish to the press. Each move was timed for the moment when valuations collapsed to the level where the audience pull of Jay-Z's crowd could outperform the audience pull of other people's marketing budgets. Jay-Z is the only person in America who can do this, because Jay-Z is the only person in America who has the audience, the taste, and the patience to wait for the panic to peak before entering the room. This is also why Jay-Z never chases trends. Jay-Z never launched a podcast network when podcast networks were hot. Jay-Z never launched an NFT collection when NFT collections were hot. Jay-Z never launched an AI startup when AI startups were hot. Jay-Z's pattern is to wait, watch, and buy when the early movers in the category have already taken the losses and proved the demand. By the time Jay-Z enters, the infrastructure exists and the prices are low. This is the opposite of how football players, athletes, and influencers are taught to build wealth. The standard playbook says, strike while the iron is hot. Jay-Z's playbook says, strike when the iron is cold and other people think the iron is dead. The cold iron is where the 100-to-1 returns hide. The hot iron is where the 1-to-1 returns live. Jay-Z's boardroom behavior follows the same pattern. Jay-Z rarely takes board seats. Jay-Z almost never takes the title of CEO in any of the operating units. Jay-Z is the chairman, the brand custodian, and the strategic architect. The operating CEOs are hired professionals who run daily operations while Jay-Z focuses on partnerships, deal flow, and category selection. The structure keeps Jay-Z's attention budget protected. Most entrepreneurs make the classic mistake of building the operating infrastructure themselves. Jay-Z never made that mistake. Jay-Z has always outsourced operational grind and kept the strategic mind free. Jay-Z also rejects the standard venture capital relationship. Jay-Z does not pitch. Jay-Z chooses. When Jay-Z wants a deal, Jay-Z waits for the founder to invite Jay-Z in, and Jay-Z negotiates from a position of cultural gravity rather than cash. In several deals, including Dus and Tidal, Jay-Z took equity at terms that were nearly identical to the terms a billion-dollar venture firm would have received, which means the market values Jay-Z's stamp at venture-scale multiples. That stamp cannot be bought. That stamp can only be earned. Which is why the stamp is the moat. The next chapter of the Jay-Z system is already in motion. Real estate in Bel Air is consolidating through institutional buyers. Private aviation is fragmenting into boutique operators. Hospitality is moving towards celebrity-curated boutique hotels. Each of these categories has the structural shape that fits the Jay-Z playbook. Expect Jay-Z to enter at least one of these categories within the next 5 years. Expect the announcement to look like a small partnership that nobody covers, followed by a quiet expansion that suddenly controls a meaningful sliver of the market. This is how Jay-Z moves. This is how Jay-Z has always moved. The myth of Jay-Z is that Jay-Z is a music mogul who happens to own some brands. The reality is the inverse. Jay-Z is a business mogul who used music as the original customer acquisition channel, and then built the largest privately held portfolio of consumer-facing luxury and entertainment assets ever assembled by a single individual who was not born into wealth. The music is the trailer. The portfolio is the feature film. Almost nobody watches the feature film because almost nobody outside the boardrooms of LVMH, Pernod Ricard, and the major streaming platforms understands how to read the financial filings. If you take one lesson from Jay-Z, do not take the lesson about champagne. Do not take the lesson about streaming. Take the lesson about order. Jay-Z orders every acquisition by the order of audience exhaustion. Jay-Z enters a category only after Jay-Z's audience has had time to forget that Jay-Z entered the previous category. Jay-Z spaces every move by at least 3 years. The rhythm is the asset. The audience can't get tired of Jay-Z if Jay-Z is not in their face every quarter. Patience in business is rarer than talent in business, and Jay-Z has more of this patience than any peer living today. The next time someone tells you that wealth is about hustle, ask that person how many times Jay-Z has waited 3 years before making the next move. The next time someone tells you that wealth is about being first, ask that person how many times Jay-Z has entered a category after the press pronounced the category dead. The next time someone tells you that wealth is about being louder than the next person, ask that person how many times Jay-Z has taken a quieter role in a louder company. The answers will separate the people who build 100 million from the people who build a billion. Jay-Z built the billion by following the rule that the rest of the world refuses to write down. Wealth is the reward for a long, patient, well-timed, well-positioned chess move executed in front of an audience that has forgotten how to look away. There is one more piece of the Jay-Z puzzle that almost never gets discussed, and that piece is how Jay-Z treats family as a board-level strategic asset. Jay-Z married Beyoncé at a moment when Beyoncé was already the most awarded artist in Grammy history. But Jay-Z treated that marriage not as a personal milestone. Jay-Z treated the marriage as a portfolio merger. The combined Jay-Z and Beyoncé brand represents an audience attention premium that no individual artist, athlete, or business mogul in the world can replicate on a standalone basis. When Jay-Z and Beyoncé release a joint project, the cultural gravity multiplies. When Jay-Z and Beyoncé appear together at an event, the press cycle compounds. Joint appearances are not vanity. Joint appearances are compounding distribution. That compounding effect is built into every business decision Jay-Z makes around family, and the discipline around family is one of the most understudied aspects of the Jay-Z empire. And then there is the discipline of saying no. Jay-Z has walked away from deals that would have made Jay-Z money on paper and cost Jay-Z in attention. Jay-Z turned down a modeling campaign worth $100 million because the campaign would have required Jay-Z to appear in a way that conflicted with the image Jay-Z was trying to protect. Jay-Z turned down a streaming partnership worth hundreds of millions of dollars because the partnership would have forced Jay-Z into a board seat that would have eaten Jay-Z's time. Jay-Z turned down a sports franchise purchase that would have been a financial win but a category distraction. Every no created the room for a future yes. The discipline of no is what most rich people refuse to learn. The discipline of no is what makes Jay-Z rich instead of merely wealthy. If you put all of these pieces together, the Jay-Z system looks less like a celebrity career and more like a private equity firm that happens to use a microphone as the customer acquisition channel. The microphone was used to build the audience. The audience was used to build the brands. The brands were used to compound the audience. The cycle runs without a CEO, without a public offering, and without the standard Silicon Valley metrics that the financial press loves to worship. The cycle runs on patience, on rhythm, on audience pull through cultural gravity rather than through debt or venture capital. The cycle is the most consistent creator-led compounding machine ever documented in real time, and the cycle is run by a man who never finished high school, never read a single business school textbook on schedule, and never trusted the blueprint of anyone who claimed to know how rich gets built in America. Jay-Z built the blueprint. The blueprint is the only thing Jay-Z trusts. The old rules of American wealth are gone. The new rules were written by a kid from Marcy who grew up with no hot water and decided that hot water was optional and the rest of the world was negotiable. The new rules require patience that hurts. The new rules require discipline that borrows no one else's calendar. The new rules require a willingness to enter markets that the press has already pronounced finished. Most people cannot follow these rules because most people cannot tolerate the silence between moves. Jay-Z built a $2.8 billion net worth by living inside that silence, then stepping out at the corner of the room. The timing is the trick. The audience pull is the engine. The patience is the compound interest that no spreadsheet at a hedge fund can match. If you want a blueprint, that blueprint is to build an audience first, then sit on the audience quietly for years, then deploy the audience into a category when every other operator in that category has given up. Repeat that cycle for 30 years, and the math arrives at a number that very few humans in recorded history have ever reached on a single balance sheet. That is the line. That is the math. That is the only spreadsheet that matters. The next time someone asks you how to build wealth in America without inherited money, without a Stanford MBA, without a family office, the answer is to copy the operating system that Jay-Z has been running for 3 decades. Build the audience first. Sit on the audience in silence. Move the audience into one new category every 3 years. Refuse every deal that does not compound the rhythm. Let the rhythm be the thing that compounds more than capital ever could. The audience compounds because attention compounds. Attention compounds because ritual compounds. Ritual compounds because the discipline of patience compounds. And patience compounds because the world is full of operators who will lose the nerve long before you do. And the nerve is the only thing that no MBA, no venture investor, and no inherited trust fund can buy for you. The nerve is the asset you build yourself. The nerve is what carries you past the 3rd quarter, past the 5th year, past the first billboard that nobody reads, past the first investor who says no, past the first press cycle that calls you finished. The nerve is what keeps you building when the only people who still believe in the blueprint are you and the small group of operators you have personally recruited into the same pattern. That group grows. The pattern compounds. The net worth follows. That is the whole system. That is the blueprint.